Hi there, I'm Jennifer Lee, Senior Economist at BMO Capital Markets Economics. So we've been asked about France's elections recently and whether or not that means that we were given the all clear, just given the results on Europe itself. So I would answer that in one word: absolutely not. Okay, two. Although we saw the worst case scenario fail to play out, which was pit one extremist to another, we are still waiting for the May 7th runoff, in which case we'll see Marine Le Pen going up against Emmanuel Macron. And this is, by the way, is the first time that one of the established parties, the Socialists or the Conservatives, didn't make it to the runoff. So this is going to be a very interesting vote on May 7th. And of course, we've got the June legislative elections as well, which are probably a little bit more important than these actual elections themselves. And of course, we've got German elections coming up in October. There's some domestic elections going on, or domestic politics going on in Italy, and of course there's Brexit. So there are a lot of question marks that are still in play in Europe, and so I don't think we can say that it's all clear on that front just yet. So what does this mean for the U.S. in terms of for France? Well, not a heck of a lot. A lot of the impact was due to more on the financial market and any volatility felt on that front. In the U.S. right now, I think most of the focus is on the political front. As I'm speaking, the U.S. administration is starting to give some headlines and starting to make some announcements on some massive tax cuts, what's being billed as some of the biggest changes to the tax system in many, many decades. Of course, this is all pie in the sky, so to speak. It still has to pass Congress, but if it does hold, if these tax reforms do hold, we could see a big increase. It could give economic growth a big boost, in which case that means more Fed tightening. Now, as it stands, we still see the Fed going a couple more times this year. They already moved in March. We look for another move in June and another one in September, and potentially an announcement of intentions or plans to start cutting back the balance sheet by the end of the year. So let's bring this on home. What does it mean for Canada? Well, as it stands, it's positive news in terms of if our largest customer, the U.S., is growing stronger, then that is good news for Canadian economic growth. But I think Canadian politicians right now have a few other things on their mind right now, such as on the trade front. That's a big question mark, especially given that we've heard a lot of threats being hurled our way from the U.S. administration, threats against our softwood lumber industry and in the dairy markets. And as well, there's talk right now that the U.S. is threatening to quit NAFTA pretty soon. So I think that is more of the uncertainty, and if that's the case, that we are going to see a lot more of these protectionist measures play up, and that's obviously not good news for Canada. And for the Bank of Canada, that's another reason for them to stay very comfortably on the sidelines, and we don't see any movement from on the interest rate front until a year from now.